Credit and debt. Getting into it. Let's look at some of the most common reasons why people get into debt. Or, say it another way, let's look at the reasons that consumers are using credit far more often today than ever before. When people need to buy something and do not have the money, they borrow or finance the purchase today and plan on paying for it tomorrow. Using credit, consumers are able to make purchases when they don't have the money or when they don't want to pay for the entire purchase at one time. This can be extremely beneficial to consumers, as it allows you to make purchases and pay for them as a part of your monthly expenses. Rather than having to save up in advance to make purchases, once only available to the wealthy, now access to a credit line is readily available to most Americans. In fact, 80% of the American adult population has credit cards. Additionally, over 94% of American adults will purchase an automobile using some form of credit at some point in their lives. As a consumer, we can take advantage of credit to make most or almost any purchase. Practically, every retail outfit in the world honors Visa and MasterCard. For those who don't, a private cards card is likely available. Follow these steps below to determine if your credit ratio is acceptable. Number 1, list all of your auto loans, school loans, personal loans, and credit cards. Do not enter your mortgage or your rent. Number 2, determine your minimum monthly payment for each account. 3, add up all the payments. 4, divide your monthly take-home into your average monthly debt. This answer will be your percentage of your debt. Using a debt ratio chart, compare your percentage of debt to determine if you have a debt problem. Debt ratio chart. 10%. You are probably a good credit manager. 15%. No cause for alarm at this time, but you should evaluate your spending and attempt to bring it to closer to 10%. 20%. You have a debt problem and should immediately begin working to reduce your debt. 25%. Extremely problematic. If you don't take immediate action, you may be in jeopardy of losing your home or automobile. Seek professional guidance or credit counseling. Keys to goal setting. Goal setting is a very powerful technique that can yield strong returns in all areas of your life. It allows you to choose where you want to go in life because it requires you to focus on and adjust your course while striving towards your target. Goal setting gives you long-term vision and short-term motivation. It forces you to focus your time and helps you to organize your resources. Through goal setting, you can expect to achieve more, improve your skills and performance, increase your motivation to achieve, increase your satisfaction in your achievements, improve your self-esteem, eliminate barriers that hold you back. Those who don't plan to fail. In failure, I have found it is hard to make excuses for not trying. When you try and set a goal as you go, even if you don't make it, you are a success. God bless you all. I hope this inspires you to change your life for the better. God has a harvest for all of us. Let's get to it. Debt ratio chart. Millions of Americans live permanently in debt. For most, it's a minor problem. But when it gets out of control, it can cause serious trouble. Practical steps to take when you are in trouble. Mortgage payments, car loans, credit card charges. These are debts that most of us manage to cope with. Being in a serious financial crisis, however, can be a frightening and crippling experience. Some physical emergencies, such as getting laid off or becoming seriously ill, are beyond our control. Other acute debt problems are caused by poor financial management. Whatever the cause, it is important to you to face it. Up to such a problem, take these steps, then resolve it to avoid the serious legal problems caused by unpaid debts. Most financial experts believe that consumers who spend more than 20% of their tax or after-tax income for non-mortgage debt are dangerously overburdened. Non-mortgage debt includes all your other borrowed money, such as car loans and credit card debt. For example, John and Jane together earn $60,000 a year, with a net income after taxes is $3,500 per month. They have a car loan of $250 a month and they owe $5,000 to credit card companies on which they must pay a minimum payment of $800 per month. The result is that they are paying 30% of their income to cover non-mortgage debts, a very dangerous position indeed. As we discussed in finding debt ratios on page 2, to find your ratio, add up all your monthly non-mortgage loan or credit card payments and divide that total by your monthly net income. If your debt to income ratio is above 20%, you should take immediate action to get your debt under control. How do you do this? Through goal setting, prioritizing, and organizing. Individuals can begin controlling and eventually eliminating their debt. Realizing that debt exists and creating ways to begin managing their debt are the initial steps to getting your debt under control. First, find out where you stand. Next, summarize all your debts, including the total amount due, the total amount overdue, and the minimum monthly payments required. Figure out what you can afford to pay each creditor. It is best to pay some amount on all your bills. If you ignore a creditor, the account may be sent to a collection agency. It should be noted, however, that you should avoid having your account sent to a collection agency at all costs. When your account is sent to a collection agency, you risk the negative effect on your credit score. High interest rates when applying for your home or business loans, the possibility of being rejected for employment, higher insurance rates, and other consequences. If you cannot keep up to the date with your payments, contact your creditors. Your position will be stronger if you are one to initiate the contact and have a clear idea of what you can afford to offer. Speak to the creditor or the credit manager, whoever can approve a repayment plan. Most creditors prefer negotiating a new payment schedule to taking costly and timely legal measures. However, please note that this renegotiation could appear on your credit record. Explain your situation and offer a modified payment plan, such as paying 75% of the normal amount for 4 months, then resuming the normal payments. Even small, consistent payments prove to your creditor that you are responsible and not a deadbeat experiencing terrible or temporary difficulties. Be sure to follow up with a letter that restates your agreement. Send it certified mail. Return receipt requesting so you have proof that it has been received. Bad or problematic debt. Going into debt can easily become problematic if we fail to understand its purpose or when we begin to misuse it. Generally, individuals who misuse credit use it as an extension to their regular paychecks. These individuals are using credit as extra spending money and are not considering the consequences of their spending. Often people will purchase $500 to $1,000 using credit cards while making only the $20 minimum payment to that particular card. They quickly reach their credit limit and realize that their spending habits must change. Since they have enjoyed their newly acquired spending, they get additional credit cards and continue their damaging spending habits and make the minimum payments on all their credit cards. Again, they quickly reach the credit limit on their new card and repeat the process. To make things worse, credit card companies may automatically increase your limit if you are making your minimum payments on time. When asked about their spending over the past month, these problematic debtors can only account for 1/3 or a half of their spending. Most of the purchases were unnecessary leisure or recreational expenses. After a few months, they realize the amount of their debt, but by then it's too late. When making monthly debt payments, in addition to regular living expenses, push you into the red each month, your spending habits have become problematic. At this point, you may be heading for a financial disaster quickly. How did I get in such debt? The impulsive factor. If you cannot account for much of the last month's spending or for much of the balance on your credit cards, you are not alone. In fact, for most, problematic debt is built from purchasing essential items. It is usually built through consumers buying impulsively. Impulsive shopping includes unnecessary purchases made on a spur of the moment. These purchases are often rationalized with common excuses including, "I got a great deal on this. I have always wanted one, and I'll just pay it off next month." Many people like to shop on a social activity or as a social activity. People go shopping when it is cold or raining, or when they have an afternoon to fill. In fact, indoor shopping centers were created for that specific reason. While we are in the mall, the different items we may catch our eyes, and we impulsively purchase these things that we would never buy if we had to pay cash for them. The credit card helped to make all this possible. Successful salespeople to understand that consumers make many needless purchases impulsively. Have you ever heard the phrase, "What would it take for you to take this home today?" Or, "If you purchase this item today, we'll give you an additional savings of 10%. Many sales managers are willing to lower or bargain down the prices of major purchases as an incentive for the customer to purchase the item immediately. They understand the power of impulse buying and realize that if the customer leaves the store, it is likely they will decide not to make the purchase. Is my personal debt out of control? Signs of trouble. It is not difficult for anyone to realize that they are in debt. However, the following scenarios describe the typical symptoms or situations of individuals who experience problematic debt. Do some of these seem familiar to you? You start to realize that there is no money at the end of the month. You just fast forward into the next month and you float checks. You previously paid cash for most of the items that were impulsive. Now that you cannot afford them, you still do not stop the purchasing madness. You frequently ask your friends for a few dollars to hold over until tomorrow because you don't have a chance to get to the bank. You reach your cash advance limit on one credit card to make the monthly payment on another. You hold many credit cards, and when asked why, you use the excuse that they all have different interest rates, so it's important to keep them. You keep your checking account on balance so that you truly never know the extent of the damage. You continue to pay only the minimum payments to make yourself feel like you're paying your bills. You are post-dating checks frequently. You apply for a new loan before the old ones are paid off. You have trouble making your mortgage or rent payments. You split your bills in two payments, half one month, half the next. You worry about money constantly. To make ends meet, you are working two jobs. You applied for credit and were turned down. You have to put all of your maintenance activities like visiting the dentist and painting your house because you cannot find a way to afford it right now. Creditors are calling you all the time. You are bouncing checks. You are leaving your mail unopened for fear of more bills. You are taking money from savings when you should not. If any of these situations are familiar to you, you may be one of the million Americans with problem debt. If credit is so wonderful, why am I in so much trouble? As we have seen, access to credit can be an incredible tool in an individual's financial arsenal. However, it can also be a source of significant grief for those who abuse it and become overextended. Some individuals establish an excellent credit rating and use credit to their advantage when needed. Others, however, begin using credit negatively and quickly realize that their debt becomes out of control as they spiral deeper and deeper into uncontrollable spending and debt. In the upcoming sections, I will attempt to explain the cause of uncontrollable debt. First, let's take a look at the different kinds that exist and the ways people acquire it. As I will demonstrate, there are 3 reasons for obtaining debt: good reasons, sensible reasons, and problematic reasons for using credit or getting into debt.